Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at Tesla. We're going to do our Elliott wave count first and our basic technical analysis afterwards. And you'll have to put up with me if I'm sniffing and snuffling constantly. My hay fever is playing me up a bit at the moment, but I'm going to do the best I can. So at the moment there's a lot of confusion about, are we impulsing off of a low? Are we going to higher highs? Is the bearish count invalidated? What are the invalidation levels? Why is it going up, Tom? La-di-da. Okay, so, and I totally understand everyone's concern, when you're in a impulsive move down and the price starts correcting backwards, you start to get nervous about your shorts, and if you're long and the price is impulsing upwards and then correcting backwards downwards, you start to get nervous about your long position. So this is why we use stops, guys. But anyway, getting back to the point, I want to get away from the complicated count we've got here at the moment, because I don't think it's serving to help explain anything to anybody at the moment, and I want to keep things as simple as possible. So we're going to head over to a super duper simple version of the chart I've got here for you. And we're going to point out the obvious. Some simple things that we're going to point out. Okay, so following Elliott wave rules, first thing we should notice about this chart is that we've had an impulsive move off of a January high. 5 waves down. So we are going to interpret this in the two possible ways available. This is either an A or a 1. Okay, it's not 3 waves, so we're not looking at a flat pattern. It's 5, so it's either a zigzag or a motive. That's it. So that's our assumption. Now we've made the assumption of an A, expecting a big A, B, C correction, which we've got completing further down here. The next thing we need to take note of, having predicted since the initial 1-2 swing we had here, we predicted this collapse. I was saying between 35 and 40%. We ended up near the higher side and got over 40%. Overall correction down. And then after we saw it bottom and we got an initial pop off the low, we were expecting 3 waves back. Where were we expecting 3 waves back to? Anywhere between the 61.8 and the 78.6. Now we ended up going through the 61.8, through the 65, but not quite through the 78.6. We got up into the golden ratio, went through it, but we found an interesting retracement in terms of the 3 wave move, which was parity between the W here. Well, I don't think it was quite parity. We'll just double check it. Between the W. Now this could have been ABC, but we labelled it WXY. And we can see that the candle came through the 100, found resistance, back down below it, body of the candle settling at 1-to-1 parity. So here's our 3 wave correction complete. So we've had a 5 wave move down and a 3 wave move back. So what are we expecting now? We're now expecting a 5 wave move down. So what are our options? There are 2 that I can see. Let's go through the first one. 1, 2. And then we've got 3 and we're working on 4. Looking for 5. So let's just pop this in yellow for the moment, an intermediate degree. How do I feel about this count? Not particularly happy, to be honest. The first thing I want to point out is we have not made a new low below the 5th of March. Now if you believe that we've had an impulsive move down, retracement back, and another impulsive move down which is bottom before the low, be my guest, go trade this as a long. I think you're wrong. Because a truncated C is basically practically unheard of. Alright, so this is either 1-2, 1-2, or this is A, B, and we're now still in the C. So without having made a new low, I'm assuming that this is a 3 wave corrective swing inside of a channel. That is going to complete, if this count is correct, wave 4 is going to complete before this wave 4 invalidation point at 692.30, and then the price, having completed a 3 wave correction, will thrust down lower in the 5th, making a new low heading towards our target. That's one interpretation. That this is a larger impulse wave, 1, 2, 3, 4, 5. Now, what don't I like about this? I don't like the scale of this wave relative to this wave. The 2 to the 4. Okay? The issue I have here is this here does not feel like it belongs to the same wave degree as whatever this corrective wave 2 belongs to. So let's look at an alternative. The alternative, really simply, is 1, 2, 3, 4, 5. Okay? Bringing us our C wave target potentially lower. Over time, making a bigger sell-off in Tesla more likely. It could even be a 1, 2, 1, 2, of a 3, of a 5, of an A, which would basically predict the total collapse of Tesla. Not necessarily the company, but of the stock. Now, we're not going to assume that for a moment. We're going to look at this as an alternative of a 1, 2. Well, this becomes really simple now, because the invalidation point for this count, if I can just find my labeling, my text, is all the way back up here. So wave 2 invalidation. We'll put this in white. Okay, so wave 4 here, if this is 1, 2, 3, 4, okay, 1, 2, 3, 4 is here at 692.30, and if it's a wave 2 all the way down into a 1, I'm sure you could find a way to count it. You know, it's getting stuck in the minutiae count at the moment. This is why I'm trying to keep things simple. So 1, 3, 4, 5 perhaps. Okay, so that gives us a count 1, 2, 3, 4, 5 down into a 1, looking for an ABC into a 2. So likely retracements for a wave 2. Here's the 61.8, basically at the wave 4 invalidation for the other count. Alright, so let's just, we can put there wave 4 invalidation and 61.8% of wave 1. Okay. Now let's just delete all this mess for the moment and just focus on this being a singular structure to look at. And then we're going to put another price target up here at the wave 2 invalidation. Okay, they are the two options I see at the moment. Now, I can't get an impulsive count out of here. Right, so the only alternative, like I said, extremely unlikely, is that we failed to put in a lower low. We've somehow gone 3 wave move ABC without putting in a lower low, and we're now going to impulse higher and take all this previous structure. That's not my preference at all. I'm not saying it's impossible, I'm just saying from a probability perspective it's very unlikely. Very, very unlikely. So I think it's more likely now that we've come down in a 1, we're now retracing in a 2, and then we're going to go 3, 4, 5 lower. The alternative I've already discussed is that we've gone 1, 2, and now we're going 3, 4, wave of lesser degree, and we're coming down in a 5th. They're the two options I see. So the invalidation points are here, wave 4 invalidation point for the count, which has us going 1, 2, 3, 4 with a 5th to come, is at 692.30. The invalidation point for the count that's going 1 and anywhere up to the top for a 2 and anywhere before it for a 2 is all the way back here at 781.60. It just so happens that the wave 4 invalidation for the first count coincides with the wave 2 expected wave 2 retracement for the other count. So just to save any confusion, let's put 1, 2, 3, 4 in yellow, 5 to come down as an option, and let's put 1, 2, 3, 4, 5 in white, and we'll put this at just, I know it's not primary degree, I'm just going to do it so it looks different. I'll tell you what, we'll do that at intermediate degree then, shall we? Intermediate degree in white. So the retracement we're in at the moment, and I honestly cannot help you anymore, purely because until this breaks down and completes as some kind of corrective structure, we can't be certain what we're looking at. So we're either looking at a wave 4, ABC into a wave 4, or we're looking at ABC into a wave 2. The wave 4 invalidation is at 692. Just to be absolutely clear of the relationship, let's put it in yellow. Alright, this happens to coincide with a 61.8% retracement of wave 1, golden ratio retracement of our proposed wave 1 to here at 692.30, and then our wave 2 invalidation in white is all the way up here at 786. So I am still of the mindset that this was an impulsive move, this was a corrective move, and this will turn out to be an impulsive move lower in the 3-wave pattern ABC. Or if the situation is far more dire and far more bearish, then this was a 1, to this is a 1-2 inside of it, and that's it. You know, you'll see close to single figures or double figures by the time it's all over. I'm not that bearish. I don't think that's going to happen. I think a big free wave move is enough. I think if this is a 1-2 inside of the C, then the C may be extended and we may come down significantly lower than A to C parity. Right, I'd be leaning towards that. But until the wave 4 invalidation for the yellow count gets taken out, we can be perfectly happy with accepting this until proven otherwise. Like I said, my only concern is the fact that none of this is going to fit inside of the same wave degree. If we come up with a 2 here, let's say, can we even get a better measurement in log? Not really. This move down, the 1-2, everything down to the 3 and now into the 4 is kind of getting too expansive to really fit inside of the same wave degree. I mean, maybe you can get a channel around it. Let's say that. Let's just take the 1, 2, 3. See, if you project up from the 2, everything here seems to be in the same channel, suggesting that this is not wave 4, this is more likely to be a wave 2. So the subdivision inside of this wave 1, let's put that up as well, because I think it's going to be in the same place. 1, 2. And then you've got a 1, 2, 3, 4. So let's say 3, 4, 5. Change this down to the minor degree as well. This explains how we've completed a wave 1 down here. The channeling of that same wave degree seems to fit better. So from 1, 2, 3, 4, 5 fits better than saying that this is a 1, 2, 3, 4, 5. So I'm probably leaning now towards the idea that we're putting a 1 down here. And then we're looking for a 2. But we've still got the other count is still valid until this level is taken out. So this looks like a big bull trap. It looks like a really big bull trap to me at the moment. This is trying to get people to tee up for a long position. So go 1 forward, 3, 1 wave up, wave 2 back, now we're in a wave 3. Okay, which is the wave everybody wants to trade, thinking it's going to go higher. Now it could, and I could be wrong. I'm always willing to hold my hands up and say I could be wrong. But given what we've observed so far, 5 down, 3 back, this should play out as 5 down. Okay, 1, 2, 3, 4, 5 to come. It's just how it should play out, unless we've had that incredibly rare situation of a truncated C. Okay, which I don't see as particularly likely. So I'm still expecting for this to retrace up in the meantime, la-di-da, and then to turn lower. When it does it depends on whether it's a wave 4 or whether it's a wave 2. Right, I'm going to leave the Elliott wave count there, guys. Now, I really hope that's simplified things. I've tried as hard as I possibly can to simplify it. So that's it. Now let's have a look at some of the technicals. Alright, so let's just hide the count for the moment. Alright, so staying on the day time frame, coming from oversold conditions here, we've had a move up, not quite at overbought conditions yet, but considering that we're getting very close to overbought conditions, we haven't really moved that high up that fast, have we? And we're already getting a little overcooked. So the idea that we've come up almost to oversold conditions yet so far, we will probably push a little higher into them, even though we haven't taken out any significant pivots. This suggests to me that this is a free wave corrective swing, right? That's pushing us from oversold, perhaps back to overbought before we roll over again. You could interpret it more bullishly. But like I said, you've got to be able to pick apart a 3-wave impulse, a 5-wave impulse, 3-wave back, and then you've got to be able to pick apart a 5-wave impulse in here. Price may develop to provide that in that rare circumstance that we bottomed early. It could be possible. It's not what I'm leaning towards. Short-term moving average cross over the long-term moving average here. You know, on the MACD, that's relatively bullish. Greener bars building on the histogram. Let's bring up our exponential moving averages while we're here. 10 in yellow, 20 in blue, 60 in orange, 250 in green, and see what we can see. So, we're getting a thrust back above the moving averages. We're above the 10, we're above the 20, we're now above the 60 with today's pop higher, and well above the 250. So, this could be the beginning of an impulse wave off of a higher low. Like I said, not what I support, or it could just be a bull trap. Look everybody, we're back above the moving averages. It's bullish right before it turns around and fucks you. Okay, it's just, I'm sorry to swear, it's just, I see it so often. These three wave corrections, they can be deep, they can be flats, they can be zigzags, they can pull the price way back to the... I mean, if this is a 2, it could come all the way back to just shy of this pivot here, have you totally convinced before turning around and dumping on you. Alright, so given the initial move off the high, I'm still bearish. That's all I'm going to say, really. Let's have a look at the weekly time frame for a moment before we go. On the weekly, we haven't even come down to test the 60 exponential. We got that far. We got so far ahead of ourselves in Tesla, we haven't even come down to the 60. We've barely crossed the 10 and the 20, and the price is already back above them. Alright, so this points to me to the idea that we haven't even gone to oversold conditions on the weekly time frame yet either. We haven't pushed down into oversold. I'd expect to see overbought to oversold on the weekly. So perhaps we're just in a B 1 2 somewhere to here 3 4 5. You could still pick up a bullish indicator of a short over the long-term moving average on the MACD, even some green bars on the histogram, a push into overbought conditions on the daily time frame, and it could all look extremely bullish just to be part of a much greater bearish move lower. Okay, so let's leave it there. I think I've said enough. So I'm going to sum things up before I leave by saying, go back and watch the count again, look at the two options, and I will say honestly, I'm bearish. I think it's going to go lower. If you're a bull and you disagree, that's fine. I don't need to hear your argument. I'm well aware of it, and I'm perfectly happy to hold my hands up and admit you're right if this takes out this pivot on the 14th of April and this thing flies off to new highs and takes out the pivot of January, then fair enough, you were right. But for the meantime, it still looks corrective. It still looks corrective, and we're either going A, B with a C to come, or we're simply going A, B, 1, 2, 3, 4, 5, going to head a lot lower. Alright guys, thank you for joining me on this technical analysis of Tesla. I hope you enjoyed it. If you're new to the channel, if you like what you've seen, please subscribe, smash the like, hit the bell notification icon to remain informed of future video releases. Leave us a comment in the comment section below if you want to. And thank you as always to my patrons. I hope this helps out some of you guys on the Discord who've been having discussions about Tesla. It's sometimes difficult for me to explain things or type things on the Discord, so hopefully this video has helped. Feel free to ask me any questions you want. We can chat about it and figure it out. If you're interested in becoming a patron and having that privilege of access to the Discord plus a whole bunch of other benefits, then follow the link in the description box below, have a look at the tiers, see if there's anything you're interested in. I would suggest waiting till the 1st of July now so you don't get charged immediately for joining this month and then in a few days time for July, so maybe leave it till the start of the month. If you're not following me on Twitter yet, there's also a link to my Twitter feed in the description box below as well. Alright guys, take care and I'll be back with you soon. All the best. Bye bye.